to another video. This is Farooq Syed here. I'm the CEO of Springfield Properties, and in today's video we have an interesting webinar about affordable housing in Dubai. In this webinar we'll be discussing about the affordable housing segment of Dubai's real estate market and how the government is promoting it, how banks are helping out with it, and what role developers are playing within the affordable housing market in Dubai. I hope you guys enjoy this video, and like every time, don't forget to like this video and subscribe to my channel. I hope you guys enjoy this webinar.
I've chosen Dubai for its outdoor activities. It's a luxurious lifestyle. There's so much to do out here.
It's secure, it's safe, it's a great schooling system.
We wanted something with lots of green open spaces where our children can go out and play.
دبي أفضل فرص لأي شخص من أي جنسية.
The beaches are really nice. The infrastructure out here is next level.
Dubai offers tremendous potential for real estate, and you can be sure that you can get a good return on investment. I would say currently it's a good market to buy a property.
It's a great place for a family and it's a great place to invest overall.
أنا سعيد جدا لامتلاك منزل في دبي ومتأكد أن دبي المكان الأفضل للاستثمار.
It's definitely the place to be.
دبي بيت الثاني.
I would now like to introduce the moderator for today's webinar, Ms. Lynette Haddad. Ms. Lynette's core professional passions are technology and real estate. She has spent her career in the technology sector for over 20 years and has specialized in the PropTech industry for the last 12 years due to her passion and experience in the real estate industry in the US and the UAE. Currently, she is the Director of Research and Data for the Property Finder Group, providing strategic direction on real estate data intelligence in the UAE. She will be joined by a panel of experts. And so, Ms. Lynette, I request you to please take it from here.
Thank you, Karen, for the kind introduction. Hello, everybody, and welcome to our webinar today. First, I would like to introduce our panelists. We have Farooq Syed, who's the Chief Executive Officer of Springfield Real Estate. We also have Mesa Saba joining us, who's a Senior Associate for Urban Planning for ACOM Middle East. We have Harry Tregoning, who's a Managing Partner of Tregoning Property. We also have Sailesh Israni, Managing Director of Sun & Sand Developers. And last but not least, we have Richard Boy, who's the Director of Mortgage Finder. As all of you know, today's webinar is on affordable housing in Dubai. So how do you measure affordable housing? So I looked at what the World Bank and the United Nations define, or how they define affordable housing, and they actually use a median multiple indicator, which basically rates affordability of housing by dividing the median gross house price by the annual median household income. So for example, in the United States and Canada, a common guideline for affordable housing is that housing cost does not exceed 30% of a household's gross income. As you can see, we have a very diverse group with us today, so I'm very curious to see how they define affordable housing in Dubai and also how they define it within their sector. So today I would like to start with Mesa. Mesa has been in the affordable housing sector for over 15 years in the US and also MENA region. Welcome, Mesa. Thank you for joining us today.
Thank you, Lynette.
So I guess the first question that I have for you is, can you just give us a general background of what is affordable housing here in Dubai and how do you measure affordable housing?
Okay, so affordable housing is, for us, it's housing that is appropriate to the needs of very low to middle income households. And it's priced so that these households are also able to meet other basic costs, basic living costs, such as food, clothing, transport, medical care, education, etc. Now, you mentioned the 30% cost of housing relative to the household income, which is also something that I've seen in my work and something that we rely on. And this usually excludes utilities and transportation. And incidentally, here in the Arab world, we have a saying that your income should be 30% spent on housing, 30% spent on other expenses, and 30% saved. So this international benchmark is kind of related to the same in our culture. But that 30%, of course, has to be looked at very carefully because it's a useful benchmark. But at the same time, the definition of affordability will definitely vary based on the individual circumstances of different households, because demand on the same household income can vary significantly from one household to another.
Okay, and here in Dubai, can you just give us just like a general background of how affordable housing started here? What kind of initiatives the government put forward to start affordable housing?
Okay, so I'll just give you a little bit of background about affordable housing in Dubai. So for the past few decades, really, since maybe 1995, there has been two main significant factors that have increased significantly the demand for affordable housing here in Dubai. The first is economic growth. So as Dubai expanded and diversified its economy, it attracted more workers who in turn demanded more affordable housing. So Dubai's population, we know, increased from about like 700,000 in 1995 to about 2.5 million in 2016. That's a huge growth, and mostly driven by low to middle income workers who needed affordable housing. The second factor is foreign investment. So as the city opened its real estate market in 2002 and allowed foreign ownership, it attracted a lot of international investment, and that drove prices higher. And as a result, put more pressure and increased the demand for affordable housing. Now, at the same time, so this is kind of the demand picture. Now, on the supply picture, while demand was increasing, developers were more focused, or they were not focused really on affordable housing, they were more focused on luxury or higher income housing. And this is for many reasons, because the cost of serviced land that's accessible was high, the cost of material and labor is high, and affordable housing, affordable housing was built more cheaply, so it had a faster depreciation rate. Now, luckily, things have improved since then, but this was before, and also challenging in obtaining financing for the lower income groups. So developers were focusing on luxury housing where margins were typically higher, and further widening this supply and demand gap. Now, however, over the past few years, we've seen a shift, and we've seen more interest in affordable housing. And this is basically, so we've seen prices and rents drop by 25 or 30% between 2016 and 2000 and now. And this is due to a combination of factors. So you have, market forces that have led to this. So periods of strong currency that reduced the purchasing powers of some key international investors. So this has reduced demand for housing. We've seen an increase in housing supply, which also contributed to this decrease in prices. Because of all these dynamics, we've seen developers shift their focus more towards affordable housing. And to make affordable housing, and here we're talking about developers who have mainly been targeting those earning between 15,000 and 30,000. We don't have clear definitions of the income brackets, but this is probably like middle income housing, let's say, in Dubai. And they've been using different strategies to deliver this product. So they've been building in peripheral locations where land is cheaper. They've been building smaller units. They've been value engineering their construction and using standardization. And finally, offering attractive payment plans. So I'll stop now, and then if you want, we can talk later about the role of the government.
Yeah. So what I find very interesting about what you just said is we had two affordable housing definitions, one which was pre-2016 and post-2016. So for example, pre-2016, as you said, because there wasn't a lot of supply in the market, whenever a project did come on board, which was supposed to be deemed affordable housing, it just never made it to affordable housing because of the demand at that point, and prices just went up. However, now we're in a very different situation where there's an influx of supply in the market, where a lot of projects, due to a lot of projects being handed over and delivered, now the prices have had taken effect, a decline effect in that sense. So we do have a lot more available to us today. Now, I would like to speak to a developer that we have here, Silesh, on the group, and just kind of give your thoughts on what Mesa just said, and how do you as a developer view affordable housing, and how do you build for affordable housing?
Lynette, if you allow me, before I answer that, I want to just share a note of gratitude to the government of UAE, to leadership and all the people, the citizens who are here, because the true test of people, of nations is how they behave when the chips are down. And I think how they have taken care of all expats is really commendable. So that's a note of thanks to all of, because we've been made to feel like home, if not better. So this has been one of those times where you are positive, you are happy, and they've been encouraging you to go out and work and take care of precautions. So a note of thanks to them. Coming back to your question on affordable housing, if you allow me, see, if you look at the wealth pyramid, right at the bottom is the blue collar workers. If we are looking for housing, so their housing is kind of very, very standardized. It is there's a policy, there is a guideline on how blue collar workers should stay. The employer should arrange accommodation, etc., etc. They have design constraints. They have basically they are taken care of. So after that, the next segment, which really needs good quality housing, is your lower middle income group, and which I would say anybody from salaries 4,000 dirhams to 8,000 dirhams, in that range. Now, these are people who would first come to Dubai, young engineers, clerks, draftsmen, people who are starting out first. So for them, there is nothing we can cater to as of now because the bank financing, etc. So we have a way of catering to them where what you do is at least they should be able to rent good quality housing. So one of the things which we do in some of the projects which we have done is you take an affordable housing project, you sell it to people who can afford it, and then you as property manager and developer rent it to people who really need it. So that is one bracket. A second bracket is where financing can be available. Say income group starting 10,000 dirhams to 20, which is the actual middle class, not the upper middle class, where they would be able to afford homes from 500,000 dirhams onwards, where there would be access to bank finance, where there would be disposable incomes to pay the initial deposit. And then finally, it would be a class which everybody has been catering to or has started catering to, people with incomes above 25,000 dirhams. In Dubai, how we define affordable housing is your annual salary times 5, provided you are able to sell it to them. So, that's how we have come to the definition. And in whichever area we do the project, we tend to keep that definition in mind.
Now, Silesh, you mentioned for the group of 4,000 to 8,000 dirhams a month salary, the first bracket. So this is where an investor would buy the property and rent it out to that group. What kind of returns are we talking about here for the investor?
I think even in today's time, I can speak of my own assets, because as a developer, I don't sell all my assets. I retain 30%, and then my property management firm takes over to rent for everyone, including my assets. So I am fully occupied in all of them, and I am getting net 6% plus for sure. So it's between 6 to 7%, even in this market.
Okay. Thank you, Salesh. Now, I would like to move over to Farooq. So Farooq specializes in the off-plan sector. And Farooq, I'm sure you've seen a lot of changes in off-plan over the last, I would say, 2 to 3 years, and especially now during the COVID situation. Can you tell us a little bit, what are developers doing to cater to the affordable housing sectors for those who, maybe have a salary between 10 to 15,000 and want to get onto the property ladder?
All right, thanks a lot, Lynette. First of all, thank you for the organizers for organizing this. To be honest, in the last 2 years, we've seen a major shift towards longer payment plans. We've seen developers removing the DLD payments as well, the 4% payments that we have. We've seen a lot of waivers by major developers. It just allows the first payment, or it allows the person to get onto the property ladder much faster and much more easier when we see major developers giving DLD waivers, longer payment plans. Just recently, during this COVID time, we've seen developers with more ready stock bring about offers with longer payment plans. I would like to talk about Nishama. Nishama has done this very well. They had a lot of buildings that were ready. They gave the 5-year payment plan where you move in, pay 25%, and then the remaining you pay over 75% over 5 years, which was very successful in the last few months. We've seen other developers do this as well. We've seen bigger developers like DR do this, where they've given 7 to 10-year payment plans on ready properties. So that's one of the major shifts we've seen, the longer payment plans. Even though developers can't always afford to compete with the secondary market, but what they can provide is better financing, improved quality over their newer project as compared to their older projects. Even though the bigger players like Imar and Dubai Holdings, Miras, they really haven't changed their offering much over the last few months. But now with this shift in the last 2-3 years, they are even bringing about their new projects at lower price points. Just today, we saw the Tilal Al Ghaf launch their townhouses, which has been extremely successful. I was there today in the morning as well, where they've launched these 3-bedroom townhouses at 1.3 million, and we've seen roughly 300 townhouses pretty much sold out just today. So there is still a demand in that sector. The reason why they're being sold out is, one, obviously the brand name is there. People are preferring to buy community living as compared to going into a development which is just a standalone development by itself. So there's been a major shift towards affordable but community living. So rather than living in a building, for example, in a non-freehold area like Dubai or Barsha, let's say, people are now shifting towards more affordable community living, because since we've seen the downward push in prices, people are staying in communities along the Qudra Road. We've seen Town Square, we've seen Dubai Hills. People are moving towards the apartments over there as compared to apartments in Barsha. So we've seen that sort of shift. We've seen internal migration as well. So people are upgrading, either moving from, let's say, even Sharjah to Dubai. So previously, a lot of people wanted to live in Sharjah for the affordable housing aspect. And even though they worked in Dubai and they were willing to do that commute of 2 hours in the morning, now they're able to afford places in Dubai South, more towards the Jabal Ali areas in DIP. DR just launched their Midtown project, which is once again sort of in the affordable category. So that's how I've seen the developers sort of shift their focus more towards payment plans. Like I said, removing their DLD fees as well. Just making it easier for the first-time buyer to get onto that property ladder. So just to make it easy, because primarily for secondary market, you need that 25% down payment, you need that 4% Dubai land department fee payment, you need that 2% commission plus your other miscellaneous expenses. So that becomes about 30-31%. Whereas when you go for an off-plan development, you can sort of get onto the property ladder with just 10% down payment. And what we've seen is also some developers who have their projects close to handover give you, let's say, a 25-75 payment plan, where you pay that first 25% during the construction period of 1 year. So even though clients might not have that 30% cash ready right now, they can divide that also over 1 year and then pay the remaining 75% over, either take the payment plan from the developer or get a bank to come in and finance the rest. So that's
Right.
how I've seen the developers sort of shift their focus towards payment plans and these sort of offers that makes the primary market as attractive as secondary, if not more attractive.
Now, it's very interesting. You said a few things here. So we at Property Finder, we track data obviously daily. And one trend that we noticed at the start of COVID was an immediate increase in people searching and sending leads for villa townhouses, and also using keywords such as open space, gardens, pools, things like that. So immediately we saw the trend that people were valuing their personal outside space because they were basically trapped in their home. And this trend has not, and that the increase the first week was by 400%. And that trend has been increasing steadily week on week since, even to this day. So with that said, I kind of want to pivot over to Harry, and let's talk a little bit about the secondary market and what you're seeing there, especially for like villa townhouse projects. What's the trend there?
Well, I think you've probably pretty well introduced it very well, that the trend is very much towards these villas and townhouses. I think anyone who is locked in an apartment with no balcony with their children during the lockdown doesn't want to experience that ever again. And as a result, it's driven a lot of people to the villas, and particularly down the Al Qudra corridor, places like Nashama Town Square, as Farooq mentioned, have been incredibly popular, which has been great, and it's probably been a very opportune time for the affordable property market who have launched so many units recently, and it's meant that the rental price certainly has held up very well for all these units. We generally, in terms of affordable housing, see much more, I suppose, people that are here already buying because they've got so happy with it, become so happy with the communities they live in, the communities develop, they have the schools built and hospitals and all the other bits and pieces that make a community very nice. So we look, and if you go back to last year, the Gulf Business said at the end of last year, the average salary in Dubai was 16,675. And if you work on a basis that 30% is probably affordable or less, that means that they'll be spending 5,000 dirhams a month on a property. So if you were to do that, and you would go to the mortgage finder calculators. I'm sure Richard will give more detail on this shortly. If you bought a house of 1.2 million, that means you put 240,000 down, and your payment would be roughly the same as your rent. So it'd be about 5,000 dirhams. So there's good opportunities, particularly as people are looking to stay longer and settling into these communities. And obviously the scale on that increases as obviously the income increases.
Yes, and actually, it's interesting that you mentioned 1.2 million and all the new villa townhouse communities that are available. If you look, as Farooq was saying, in Nshama, you can buy a townhouse for about 1 million dirhams. Villanova, Serena, they're priced very well as well within the Dubai land area. So this was the other shift that we started seeing, is that, people were, instead of buying a 2-bedroom in Dubai Marina, they were now shifting, for example, to the Dubai land area to look for a villa townhouse. What would you say, are you familiar with any rent to buy opportunities right now?
Well, I think the market's become flooded with them a bit more recently. We haven't actually dealt with them in the past, but mainly because they've been in areas we haven't really been dealing with, more like JVC and JVT. But there seems to be many options that have come about. And I suppose in the sort of COVID or post-COVID or wherever we stand on that at the moment, because that's the other thing that's hit the market, is that people have had their salaries cut. Yeah. So that's the other thing. So people that were living in, I suppose, villas for apartments, 100,000 or around a year in the marina, are getting villas for less. So they're getting much better value for money. And there is going to be a lot more interest in this rent to own.
Yes, absolutely. And the Dubai Land Department came out last year with a new title deed specifically for rent to own, which we found was very interesting and very thought forward. Okay, so I want to talk a little bit about mortgages. Richard, if we can get to you. With everything, how are you? So with everything that Farooq was explaining with off-plan and the payment plans that they have with the developers, obviously the payment plan is, for 5, 7, 10 years, typically what we hear. And also with what Harry was saying about, if it's 30% of your income, if you buy 1.2, your mortgage is about 5,000. Can you kind of give us a little bit more in-depth information on what, for example, if you're buying an off-plan property, what are your finance options if you are a non-UAE resident versus a UAE resident? Same thing with the secondary market.
Okay, so if you're a non-UAE resident and you're looking at off-plan finance, the options would only be for the mortgage payment on handover. So whatever the terms are of the SPA, the bank will then finance the final payment. Generally, you're looking at some banks will finance the payment at 50%, other lenders will finance the payment at 60%. That's generally the rule with off-plan on handover. If you're comparing, looking at UAE residents, there's been a change recently which is aimed at first-time buyers. So this is obviously good for the affordable housing market, in that if you're talking to me in December, I would have mentioned you needed 25% down payment. For UAE residents, first time, that's now changed to a 20% down payment. So it's making it much more easy to buy. And if you're employed, there are a few options with banks where they'll even pay 80% of the DLD fee and 80% of the agency fee. So that means you actually get a loan to value of 85%. So housing for expats living in the UAE this is the best it's ever been. The other factor is interest rates. Obviously, we've seen what's going on globally. So the US Fed rate has dropped to just about an all-time low. So this is a real benefit for anybody, obviously UAE residents buying here, because now we're looking at interest rates at 2.25%. I've been in Dubai 15 years. I've never seen interest rates at 2.25%. So again, not just the affordable market, every single person is looking to buy a property now. The loan costs have come down dramatically. And we've witnessed that, obviously, by the number of online inquiries we get. I mean, month on month, it's higher than what it's ever been. And also loan dispersals. An interesting fact we have noticed, though, is the average loan size has actually increased. So that might be what Harry was talking about, and we were just discussing about clients, in some cases, moving away from apartments into the villas for the extra space. So if we're comparing non-resident against UAE residents with interest rates, you do find, though, for non-residents, the interest rates will be higher, typically around about the 5% mark. But certainly finance is available for non-residents here in the secondary market. Again, secondary market, 50 to 60%, or as we discussed on the handover market. Anything else, Lynette?
No, that's very good. Thank you, Richard. One thing that I wanted to mention is so as of last year, the end of last year and the beginning of this year, we started to see prices stabilize. And I'm just looking at all the questions that we're getting from people, and this seems to be a common question. So we started to see prices stabilize and in some areas increase. Now, when COVID happened, everything kind of froze in the property market, like literally. So prices didn't fluctuate, nothing happened. Now, what we started to see post-COVID was not post-COVID, but post-lockdown, was we started to see transactions level rise significantly. We saw this trend with villa townhouses. We saw the trend for mortgage inquiries rise significantly, as Richard said, the highest it's ever been for Mortgage Finder. And we started to see a lot of consumers and end users and investors buying property as they felt that this was the right time, the best time to buy property here in Dubai, which I also believe is true. Now, one thing that I wanted to ask Mesa, coming back to you, Mesa, is last year, Sheikh Mohammed put together a real estate committee, and this was basically to stabilize and put a little bit more direction on the projects that were being built and launched in Dubai. As all of us have already spoken about, we've had a large amount of supply come into the market. Last year, there was about 40,000 units completed. This year, we'll probably have more or less the same. During COVID, construction did not stop. So I'm very curious to understand from you, Mesa, with this new real estate committee that Sheikh Mohammed put together, how do you see real estate projects, and also maybe for Farooq, if you want to chime in, how do you see real estate projects changing the communities, the development, urban planning? What do you see for new projects coming about?
Yeah, I think it's a follow-up on what Farooq said. I think there is one of the, obviously this committee has many objectives, as you mentioned, including balancing supply and demand, thinking strategically about the real estate market for the next decade, avoiding duplication of projects in real estate sectors, and ensuring that there's competition between companies and private investors is kind of under control, and prioritizing unique projects. And most importantly also for my answer is this emphasis on quality over quantity. So as Dubai is evolving and maturing as a city, so the intention is to look beyond the numbers. It's beyond how many units are we providing, what's like, is it 30% affordability? It's to look at what are we actually building. So what kinds of communities are we creating? What kind of city are we creating? So we kind of see that from our interaction with different government agencies, that there's more emphasis now on creating communities and also linking all these communities together, because you know Dubai is I've heard Dubai being referred to as the city of many cities. So it's linking all these things together to create a more livable, sustainable, resilient, to improve the quality of life. So there is really now more emphasis on those kinds of aspects. And yeah, so there's more direction to ensure that, as Farooq said, it's not just a building and we tick the box for providing affordable housing, but it's really providing affordable housing and housing that is that ensures the long term that for the long term Dubai remains a top destination for investors and for residents because of the quality of life that it offers.
Plus,
Absolutely.
Shed some light on Lynette, what you said about the 40,000 units that are going to be handed over this year, and that's sort of been the flow over the last few years. I think coming up in the next couple of years, because we've already been seeing a softening of the market for the last few years pre-COVID. So I would say from the 2014 peak, we've been seeing the market sort of come down slightly year on year. And I think in the last 2-3 years, we haven't seen as many launches, new property launches, as we saw in 2015, 16, and 17. And a lot of those handovers have been taking place since last year. So last year, 2020, and I think even 2021, we will see these numbers. But in the years 2022, 2023, and probably 2024, I personally believe that we'll see a lot less property coming into the market as compared to this year and last year, because we've had way less number of launches. What we've seen, the trend that has been going on since last year, is that major developers are now rebranding their offering and offering it once again. So what Emaar will do is it will run a campaign, a marketing campaign on one of its previously launched projects from 2018, rebrand it, make a new offer, increase the payment plan duration, probably give a 4% DLD waiver, just to sort of keep the momentum in the market going, to keep driving sales. But I don't believe that this number of 40,000 will stay over the next 2-3 years. And that's why we will see sort of supply, which is sort of going up, will start leveling, whereas demand will start picking up. Already, just in the last 2-3 months, I think I get more calls from clients asking for a good deal. And right now, there's literally more buyers of good deals than there are good deals in the market.
Yeah.
There's a lot of movement in the market, and I do believe that we will see supply sort of leveling off in a year or two, and then you will see the prices sort of start to shift upwards as well, because Dubai is still marketing itself excellent around the world. Even over this COVID situation, I have high net worth individuals from India, Pakistan, African countries preferring to move to Dubai as compared to European nations, just because of the fact that Dubai is handling this COVID situation so well. And I do believe that this situation of post-corona, we might even actually see a positive shift in terms of overseas investors or high net worth individuals moving to Dubai, to conduct their business and eventually even invest in real estate market, which I personally I'm a very bullish believer of Dubai's real estate market, and I do believe over the next 2-3 years you will see the prices sort of start to move upwards as well, and we'll see supply sort of reduce in the next couple of years.
Okay, so you just answered one of the questions more or less. Thank you. Actually, two of the questions more or less. Harry, how do you feel about it? Like the outlook for the next few years in the secondary market?
Well, I feel very positive. I feel that every day people tell me that the numbers are dropping in Dubai, but I only see more people renting, or more people coming here at the moment. I think obviously none of us know what the whole COVID situation is how it's going to play out, but it's going to affect every country equally. So it doesn't mean that people are just going to leave the UAE. But, there are not going to be many jobs in the UK. You see their GDP dropping pretty well off a cliff last month, and I think that's going to be reflected worldwide. So I feel pretty buoyant about the market here. There are new families arriving at the moment, very much for the new school year, and we're seeing a lot of people moving into our properties.
Yes, absolutely. We're also seeing the same trends in the search and demand data that we get on Property Finder. Now, I kind of want to talk a little bit about how developers are approaching the COVID situation. So Salesh, Farooq, I'll start with Salesh. You as a developer, are you seeing investors asking more questions on the build of the property, the composite of the properties, whether or not there's outside spaces due to COVID? Are you seeing any interesting trend?
One thing is for sure that there's certainly more inquiry in affordable housing post-COVID. And I'll start with first-time investors first, because they do feel now that for instance, buying a luxury item may not be a priority, but staying in a good home now is. So they are all the more looking at this as an opportunity to make sure that at least they can create an asset. So a lot of inquiries which I'm handling, in fact, I've been in the last week when we started marketing my new project, most of them coming forward are first-time buyers, and this is a good sign that finally they are crossing the barrier to take the apartment upfront. And post-COVID, like Farooq and many others said, they are looking at integrated communities. So what that means is it's not really your popular destinations that matter. What matters is how close are the schools, how close are the medical facilities from where you're staying. How is there a metro station in the vicinity? Is there an upcoming metro? These are the kind of things that people are considering, that they want to stay in an integrated community where commute is easier, and a lot of first-time buyers are coming forward to this. And even in terms of investment inquiries, say from larger institutional investments, they are also looking at affordable housing as a safe bet, because no matter what happens in this pyramid, there will not be too much appreciation or a correction either, right? When you are looking at an affordable housing, it doesn't change much. And I'll just give you an insight into it. The reason is the land cost in the areas where affordable housing is built is almost close to the development cost of the land itself, right? So if you have a land at 100 and your construction cost, or including your full development cost, is 650 on a title deed area, because you don't take common areas, gyms, etc. So anywhere, if you get a product which is 750 to 800 dirhams a square feet, it's always going to be of good value. Now compare this to in investment. Say you are going out to take a property in downtown or elsewhere. The land component may be 300, 400. The construction cost still remains the same. There's not much difference. So the gap that you see, the inflation that you see, is the unnatural increase is in the increase of the land, because the cost of the property is, so therefore they correct and affordable housing corrects a little less. So there is an interesting trend in people looking at assets, and it also tokenizes investment. So if you have 30 million and you are buying 5 properties, why not get a building? It's something like that.
And these first-time buyers that you're seeing, Salesh, are they end users or are they investors?
Yes, actual end users. I have inquiries from people from bankers, people having decent jobs in bank, earning 15,000, 18,000. Some of my buyers have been one of the most interesting cases. One gentleman who's an electrical engineer, Imarati, 18,000 salary with the government. So we during the off-plan period, we are giving a scheme was make your own payment plan. You just pay whatever you want, but on completion you pay full. So he has paid 5,000 dirhams a month religiously over this period, and now he's finally getting access to bank finance. So that's been some interesting cases where people. And the other case which I'm really happy about is a young pilot. And you might think now with people not flying and stuff, he's still committed. He's still saving, and his the whole thing is that look, once I make this, then I can spend on everything else. At least I have a home for myself now.
That's very good. A lot of people are thinking like this. Sorry, Farooq.
Yes.
I want to add something to what Salesh has said. You very well defined the cost of construction and the cost of land. Because a lot of people are asking, what's the downside in today's market? What's the downside of purchasing a property in today's market? How low can the property value go? And that's one of the questions that I just read as well. What Salesh just explained is that when you're buying the land at, let's say, 100 dirhams a square foot, and you're spending 650 per square foot on construction value, your cost of construction is 750. Currently, the average sale price in Dubai is close to actually a little below 1,000 dirhams, 900 dirhams per square foot is the average selling price. So what is the downside? And because of the price being at that, we're not even going to see too much or too many developers come up with too many new developments, because it's not profitable to do so right now. It's not profitable to be selling properties at just your construction cost with minimal, because it takes 3 years to average takes 3 years to develop a property. If it's costing Salesh 750 dirhams a square foot, he needs at least 30% return, 10% return every year. He needs to have a minimal profit margin of 30 to 35%, keeping his cost of running his business, the cost of his money that he's investing into the land, the cost of construction. He needs some sort of return. So we won't see the prices go that much below. Previously, when the prices were averaging at about 1,600, 1,700 dirhams a square foot, there was a huge gap between the construction cost. What Salesh was explaining was the land cost was inflated. But in today's market, we're not seeing the land cost at such exuberant rates. So I don't think there's much of a downside to any new investor jumping onto the property ladder in today's market. The prices can go below construction cost, or at least they can go below construction cost over a long period of time. They might go down at a period like this, like Corona, COVID, global markets melting down. We might see a short-term decrease in the prices, but they will eventually fluctuate back and come back up to a level where developers find it profitable to develop, and buyers find it affordable to buy as well. So I just wanted to add this thing. And as Maisa explained previously, that people are sort of going more towards value engineering, where apartment sizes or property sizes are becoming smaller. People need that outdoor space. People need those public parks. People need those public spaces outside their homes to at least have some places to breathe and live with their families. So I do think that trend is more towards the community living, where they have outdoor spaces, parks, pools, facilities around their property. And that's sort of the shift of where developers are developing and where buyers are buying in today's market.
Yes, and we're clearly seeing that in the new communities that are being developed today. Like, for example, Dubai Hills, Talal Agaf, the town squares, absolutely. Mesa, leading from what Farooq and Salish just said, are there any government incentives for developers, especially on land price, when it comes to affordable housing?
Look, I mean, I'm not, as far as from what I can see, the main and probably most cost-effective intervention that the government has done to facilitate the delivery of affordable housing has been increasing the supply of land with main infrastructure, you know, a little bit on the periphery of Dubai. So developers have benefited from this cheaper land in suburban locations to deliver more affordable housing. And buyers have been given the option, you know, you can trade location for size, so this gave more options in the affordable housing market. But from a planning point of view, what this has done is, of course, led to urban sprawl, like the city has expanded, and we've seen this leapfrogging. So you have, you know, areas that have been skipped for more cheaper land further out. So going back to this idea now of focusing on Dubai as a city, creating really a more of an urban experience, we hope to see more developments in these kind of pockets of land that have been left empty, just as from a planning point of view. But I think this providing access to land and even expanding the metro has really been key to increasing the supply of affordable housing.
Absolutely. I mean, if we look at the expansion of the metro up to the 2020 site, we have all the areas, for example, Discovery Gardens that has benefited from it, and the areas further going towards Dubai South, Al Farjan, for example. So yeah, absolutely. The metro definitely does make a difference. I know that was another question that came through, buying a property close to the metro versus not. If you look at property prices that are, you know, literally right in front of the metro versus, you know, let's say a 5-minute walk from the metro, you do see a difference. Harry, I wanted to ask you, there's a lot of people on this webinar who are not from the UAE. So can you just kind of give an overview of where are these affordable areas and kind of what are the prices more or less for a property on the secondary market in these affordable areas, or the suburbs, as we call them here in Dubai? Which, by the way, is nothing's more than 20 minutes away in Dubai, so it's not far.
No, you're right. No, always about 20 minutes away. Well, the main area that's been developed affordably is probably down the Al Qudra corridor and JVC and JVT, and that's very much the area we see this anyway. And you can now get a 4-bedroom house in Akoya, Oxygen, for a million dirhams, and as an investor, you'll be looking to get a return. I mean, the rents start for a 4-bedroom house at about 75,000 a year. So take away some service charge and things, you're definitely going to be getting about 5% back, which is a pretty good return on money anywhere in the world at the moment. And these areas, we're seeing that they gain popularity after people have moved in. No one likes to be the first person that arrives. And secondly, it allows time for the greenery to sort of build up a bit. They all feel a bit barren when you first move in, but the developers are very good at making everyone feel in a much better place. I mean, Arabian Ranches too is now a very green community, whereas when the first people moved in, I think it's about 2 years ago, you did feel that the dust was still being swept off the streets.
Yep, that was me. It was very surreal. It was very empty, but it takes about 6 months for a neighborhood to a brand new neighborhood to fill in. Yeah.
Yeah, and then of course it's more attractive to the secondary market.
Of course, absolutely.
So it retains the value pretty well.
Absolutely. Wanting to go to Richard, when it comes to mortgages now during COVID, I mean, the banks have always been extremely competitive, or I shouldn't say always, last 2 years they've been extremely competitive on their products. Have you seen anything new come up through COVID? Are banks being more lenient? Are they being more conservative? Are they offering, for example, being able to pay fees through part of the mortgage? What are you seeing?
I mean, local lenders have been very aggressive in the mortgage market. So yes, the banks are lending at the moment. As I mentioned before, yes, first-time buyers can get 80% loan to value. That's also for self-employed as well as employed clients. Obviously we mentioned about the financing of the fees. Yes, you can get that extra 5% added onto your mortgage, so you get the loan to value at 85%. There are certain sectors of industry that have been affected by COVID, so it then is difficult for an individual to get a mortgage, such as anybody that's employed in aviation. So the obvious kind of sectors, then it has become difficult. But even in aviation, we can still get loans to clients at 50%. So obviously with having access to the whole of the market, we can source loans for individuals because obviously we know the criteria of each individual bank. Even at the affordable end of the market, banks do have a criteria, but the minimum salary is 10,000 dirhams for a mortgage loan. And a minimum loan at the affordable end, generally a bank will not really go below 150, 200,000 dirhams. So clients can buy on a financed property at 250, 300,000 dirhams. So there's a lot of opportunities for the people, the clients that fit in that sort of category. And obviously with the movement in prices we've seen, it's opened up whole new areas. So it certainly is a good time to be looking to buy at the moment. And again, the type of profile we're seeing from clients, these are individuals that have been, when we get the inquiry, we'll speak to the client and they'll say they've been in Dubai 5, 10, 15 years. And they've seen this cycle in the Dubai property market before, because we've all been through it. And they don't want to miss this opportunity because they're kicking themselves last time in 2005 or anyways, because they've paid a lot of rent since then. So obviously now if you're looking to buy, and if your mortgage payments, if your rent payments at 60,000 dirhams over the next 5 years, that's a lot of mortgage payments over the next 5 years that's coming off the loan. So even if the property stands still, you still actually have got an asset because you're paying the loan off. And banks now are also regulated by the UAE Central Bank. So the market has matured considerably. So now the mortgage products are the same as other parts of the world. So it is a lot different to when I first came to Dubai. So that's it really, Lynette.
Yeah, no, I agree with you wholeheartedly. I've been here 14 years and I remember when I first moved, I lived in the marina, and Arabian Ranches to me was like a whole nother world away. I think I came here once to buy something and I was just like, where am I going and why am I going so far? But now, like I said, 20 minutes, you're pretty much anywhere in Dubai. So these suburbs, these areas where you have the affordable housing, which is the Dubai land areas, which includes Villanova, Serena, Town Square, Akoya, Oxygen, even the Dubai Hills, you can find some really good affordable deals. And of course, the Dubai South area. There's a lot of really good deals for end users, for investors. What we're looking at returns, depending on the area, it can be anywhere from, like, for example, 5% up to 10% plus in some areas, for example, like in the international city areas and Discovery Gardens. So there's a lot of opportunity, and absolutely right now is the best time, in my opinion, to buy. We have a few questions here. Actually, we've been going through the questions and you've all been answering them very well. One question is that the UK waived off registration charges. I believe that's the stamp tax. Do we see the UAE following up? Well, obviously every emirate is different. So for example, Abu Dhabi, they waived one of their fees when you buy a property until the end of the year. Dubai, I would say a few months ago, we had a webinar with Dubai Land Department, and it was something that was under discussion, but we haven't heard anything since. So this is as much as I know about it. I don't know if any of you know anything more. Okay, then another question that we have, and this will be for you, Richard. Someone wants to know a little bit more about access to finance and how can investors who are not in the UAE, so non-UAE residents, get access to finance?
Okay, there's two options for non-residents. One is very straightforward, where a non-resident can get 50% loan to value. The criteria for that is just based on 3 months personal bank statements. The bank wouldn't want to know a little bit of background about the client, such as they're employed or self-employed, but it's just purely based on credits into their bank account. They're not looking at any existing liabilities in the home country. And the average balance we want to see is 25,000 plus a month. And that's relatively easy to get a loan approved. It does take slightly longer to get that type of loan approved than what it would in the UAE, but you're looking at 10 days to get a loan approved. Okay. The second option is if you're wanting a higher loan to value, say 60 to 65%. Yes, that's certainly available for employed clients, but the bank will require full financial disclosure. So that's where we'll want proof of employment, salary certificates, pay slips, 6 months bank statements, tax returns from the home country, etc. So there certainly are finance options for non-residents out there with the banks that we deal with. Regards to interest rates, if you're looking at 50% loan to value, low document, the interest rate is just under 5%. If you were able to obviously provide the extra documentation, then the interest rates will be lower than that. Say 3.99. So that is the options for non-residents.
Also, Lynette, you can even add. We can even add that we off-plan developers, they have no requirements or no paperwork required for overseas buyers. So most overseas buyers end up buying directly from the developer for the reason that there's no sort of credit checks, no requirements. You can go for these rent-to-own options, not rent-to-own per se, because an overseas buyer wouldn't be renting here, but at least go for these longer payment plans. Like we've had Tilal Al-Ghaf, we've had DR with the 7 years, Nashama with the 5 years. There are certain developers given even up to 10 years payment plans. So DR for their Midtown project, they're giving 10 years. I know a developer in Maidan called Rose Bay, they're giving a 10-year payment plan on prices. So yes, they do add that interest. They do sort of increase the price slightly to allow for that, but it makes it very easy for overseas buyers to get onto the property ladder in Dubai when you have such long payment plans. So I think that is a better option for a lot of overseas buyers.
Absolutely. And also just one thing that I wanted to add before we end, because it's been an hour. Dubai over the last many years has worked very hard on becoming as transparent as possible in the property sector. We've been working very closely with them, and last year we created Muasher, which is the first official house price index for the city of Dubai. And this is just Dubai trying to be as transparent as possible when it comes to prices and transactions in the region. Last month, Dubai was moved up in the transparency, the JLL Global Transparency Index, the Global Real Estate Transparency Index, by 4 spots. And basically JLL said that Dubai is at the cusp of going over to the other side of full transparency. And this is due to all their efforts that they're putting forward to help drive and bring in more foreign direct investment. And I think they've been doing a fantastic job. I would like to thank all of you, the panelists, for joining us today. This was a great discussion. I would like to thank Dubai Land Department and Invest in Dubai for putting on this webinar. And I would like to thank everyone who joined us.
Thank you, Ms. Lynette, and thank you to all our panel of experts for joining us today and taking time from their schedule and sharing their thoughts and perspective with us. So today, the links for this webinar video will be sent to you via email, and we are also conducting a short survey to get your feedback on today's webinar, and the link to the survey will be shared via chat and via email. And to register for your next webinar schedule for the 8th of September 2020, please visit our website, www.iidubai.ae, and also follow us on our social media channel to keep yourself updated. Thank you all once again, and we look forward to seeing you on the 8th. Bye for now.
Bye, thank you.
Thank you.
Thank you. So I hope you guys enjoyed this webinar. I think we touched upon quite a few different aspects of Dubai's real estate market, about the affordable housing scheme, how developers are aiming more towards affordable community living as compared to affordable individual projects, and where clients are inclined towards buying, and how the government is playing a role towards limiting supply in the long run, and what banks are doing to promote clients to buy properties, and how they've increased, how the central bank has increased the loan to value ratio, and how you can even get your 4% DLD, Dubai Land Department transfer fee, and your commission fee financed up to 80% from banks. I think this will really open more new doors within Dubai's real estate market. It will increase the home ownership ratio of the people living over here. And I've also noticed that people are now looking at Dubai as a final abode. With the new government initiatives and the new visa plans that have been introduced in Dubai, people are now looking towards Dubai as a final home for them. So if you worked here for 20-30 years, and typically you would move back to your home country post-retirement, now you have the option of staying in Dubai as long as you have some sort of an income or any sort of passive income from a real estate or any other business that you own. I think this webinar was very, very interesting, and we've touched upon some interesting points within Dubai's real estate market. I hope you guys have enjoyed this video, and like every time, don't forget to like this video, subscribe to my channel, and follow me on Instagram for daily updates. Until we meet next time.